Your mortgage application just got rejected. Not because of your income. Not because of your deposit. Because of a £47 phone bill you forgot to pay 3 years ago. That is the reality for thousands of first-time buyers across the UK every single year. And today I am going to make sure that never happens to you. Welcome back to From Zero to Keys on Marcus Lane Real Estate. I am Marcus Lane and I upload a brand new episode every single day, so subscribe and turn on notifications right now, because what I am about to share in the next 5 minutes could be the difference between getting your keys or getting rejected. Let us get into it. Here is something that shocks almost every single person I have ever worked with in 30 years in this industry. Your credit score matters more to a mortgage lender than your salary. More than your deposit. More than your job title or your employer or how long you have been saving. Before a lender looks at anything else, they pull your credit file. And in the first 10 seconds of seeing that file, they are already forming a decision about you. So the question is, what are they seeing when they look at yours? In the UK, your credit score is calculated by 3 main credit reference agencies: Experian, Equifax, and TransUnion. Every mortgage lender uses at least one of these 3 to assess you before they will even consider your application. And here is what most people do not know: your score can be completely different across all 3 agencies. So checking just one is not enough. Here is the good news. You can check all 3 completely free of charge right now. Experian at experian.co.uk, Equifax through ClearScore at clearscore.com, and TransUnion through Credit Karma at creditkarma.co.uk. Pause this video, check all 3 and write your numbers down. I will be here when you get back. Now here are the 5 things that are silently damaging your credit score right now, and most people have absolutely no idea any of them are happening. Number 1, missed or late payments. This is the single most destructive thing on your credit file. One missed payment, just one, on a phone bill, a streaming subscription, a credit card minimum payment, it can stay on your credit file for up to 6 years. 6 years of damage from one forgotten payment. Set up direct debits for absolutely every bill you have today. Not tomorrow, today. Number 2, high credit utilization. This one surprises people every time. If your credit card limit is £2,000 and you are regularly spending £1,500 of it, that is 75% utilization, and it is silently destroying your score every single month. Lenders want to see you using no more than 30% of your available credit at any time. Pay down your balances and keep them consistently low. Number 3, not being on the electoral roll. I can see you raising your eyebrows right now. But this is real. If you are not registered to vote at your current address, lenders cannot verify where you live and your score takes an immediate hit. Go to gov.uk and register right now. It takes 3 minutes and improves your score almost immediately. Number 4, too many credit applications at once. Every time you apply for credit, a loan, a new credit card, even a phone contract, a hard search is recorded on your credit file. Multiple hard searches in a short space of time sends a signal to lenders that you are desperate for money. And desperate is the last thing you want to look like when you are asking someone to lend you £200,000. Stop applying for any new credit at least 6 months before your mortgage application. Number 5, and this one genuinely surprises people, having no credit history at all. Having zero credit history can be just as damaging as having bad credit, because lenders have no evidence of how you behave when you borrow money. If you have never had a credit card, consider getting a simple low-limit one. Use it for one small purchase every month and pay it off in full every single month without fail. Within 6 months you will have a clean, positive credit history that lenders love to see. So what score do you actually need? As a general guide, you want at least 700 on Experian, at least 420 on Equifax, and at least 610 on TransUnion. If you are sitting below those numbers right now, I want you to hear this clearly. Do not panic. Credit scores can be improved significantly within just 3 to 6 months if you take the right steps. And you now know exactly what those steps are. Here is your homework before episode 4 tomorrow. Check all 3 credit scores today: Experian, ClearScore and Credit Karma. Write every number down. Set up direct debits for every single bill you have. And register on the electoral roll if you have not already done so. 4 actions. Do them today. Because in episode 4 tomorrow we are talking about mortgage brokers. What they actually do, whether you genuinely need one, how to find a good one, and the questions you absolutely must ask before you trust anyone with the biggest financial decision of your life. I am Marcus Lane. This is From Zero to Keys on Marcus Lane Real Estate. Subscribe, turn on notifications, and I will see you tomorrow in episode 4.